Cryptilians and crypto crackheads, today is April 12th, 2021, and you're about to get Timified. Hey, new viewers, this channel is unlike any other crypto YouTube channel. So I bridge the gap between the two major types of crypto channels. You'll see your hardcore traders, which requires, 8+ hours a day in front of a computer screen, which most of you retail investors do not have. Retail meaning you're new to the space. And then the second type is, interviewing CEOs or talking about why you're bullish on this and that, the project's fundamentals, those two types of channels. My channel helps retail investors like yourself, most likely. If you have not been in the space since 2019, you're retail, you're new. It helps you understand that buying and praying a hype coin like your OMI or your Cardano is one of the worst strategies out there to build wealth during this bull market. So to do that, I show you two things: how to statistically have a high probability of being in a winning trade before you hit click with a very simple system. And then two, I help you understand that taking profits like a boss and profit pimping will build your wealth so much more than buying and praying. So I have a library of videos in the description section. You might want to check those out, particularly my market crashes and cycles video, how to set up my chart video so you can follow along. And if you hear me say anything that is jargon or unfamiliar to you, it's likely in the description section with a quick link on, what that is. So that's what we do. Cryptilians and crypto crackheads, are you ready? All right, let's get going. Okay, so I will likely do two videos today as what my goal is. First on overall market sentiment in Bitcoin, maybe Ethereum mixed in there. And then the second video on my altcoins, because this channel covers smaller altcoins, because Cryptilians and crypto crackheads know that there's much more wealth building in small caps, because they move stronger and faster. So it's as simple as that. Anyway, so this is my market sentiment video of the day. I want to do something a little different. So I'm trying to address different topics and different ideas as Bitcoin is consolidating and being very boring here, right? And I've been saying it's kind of consolidating since it made its high of 61,000, because I just really don't think it has enough in it to give another push, even though it looks like it might just make me a liar pretty dang soon, but it's got to decide. Literally, I think this week it's got to decide. So anyway, one thing I haven't mentioned on my channel is actually I have. I mentioned the Coinbase Cardano news that I think propped up the market longer than what it should have been propped up, piggybacked with the Coinbase IPO news, which is fairly bullish for the entire space. It simply adds more world stage legitimacy or institutional legitimacy towards Bitcoin, right? Because Coinbase being the American exchange going public. But I think the market is being propped up on that, and I think the chance for a sell-off once it happens is pretty high, okay? Like really high. Anyway, so that's kind of been my last 3 weeks. So new viewers, you can check out all my previous videos leading up to this 3 weeks in, and it's educational on top of that. So I want to do something a little different. Right now I have, actually it's 12-hour, I want the 8-hour. I have the 8-hour candle, the 8-hour chart pulled up on Bitcoin. I have removed price, and the way you can do that is, so you see my mouse hovering up here, it's the price stuff. You might have to hover above it, but you can hit that. Okay, hit that hit the eyeball show button, and similar how you do on your indicators, you can make your indicators disappear, reappear. Okay, all right. So I've taken price off, and this is the 8-hour 10 EMA and 200 EMA. So the exponential moving average of 10, exponential moving average of 200 candles of the 8-hour. All right. So what I want to do here is show you just another, kind of a reasoning why I just don't feel that Bitcoin has enough gas in it to do another significant push. And the consequences of going on another push versus having a healthy correction, which we really haven't had. So I'm going back to 2017, as you can see here, 2017, this is 2013. So this is a lot of price history that you're staring at, right? So this is almost 4 years fit in one graph, maybe 2.5, or 2.5 to 3, or close to 4. Anyway, so I guess I can do it exactly. So July 2015. So 2.5 years of price history right in front of you. This white line here represents the previous all-time high of 2 market cycles ago of about, and so if I put price back on, you can see price went up to there, of about 1187 or so. And we've already studied how Bitcoin reacted to that last run versus this run. That's not where I'm going with this. What I want you to look at with your eyes is the red and the orange line, how they play together, but also the dips in the red line before or between touch points of the orange line. So between moments that the red line, the 10, crosses the 200, how many little hesitations or dips does it have? And that's what I want to look at here. All right. And we'll look at the percentages that it's gone as well. All right. Between the touch points of the moving average. So we'll start with this one. As it broke its all-time high, and we will be focusing on this and this right now. So from point to point, let's measure from when it broke back above its 200 EMA to the top of the 10 EMA, not the top of actual price, because price, obviously, for the EMA to be up high like that, price was up higher, right? But anyway, just measure, keep it simple, 170% from touch point to touch point. Also, from bottom to top, and again, this is of the EMA, not the price, it was 76 days. So we had, I think, 170%, 176 days, similar numbers. Okay, so that's when it broke all-time highs. That was this push up, and that's a pretty big push. Note that the next push was significantly smaller, 130%. Actually, no, I told myself I'd measure from the time it breaks it. So 111%, but from the bottom to the top, how many days? 45 days. So we've gone down in time. So it was 70-something days, 40-something days. And then it went parabolic. All right. So that's measuring, that run, because that was, everything up to here was kind of crawling out and turning into a bull market. Maybe the bull market started, around here. But I'm measuring from all-time highs just to try to relate. All right. So it touched, so after it broke all-time highs, actually breaking the all-time high, it touched it once, twice, 3 times. All right. Now, here, this is uncomparable because Bitcoin was essentially a small cap coin, right? So that's not ever going to happen again. That's just absurd. Anyway, so we can't really use that. So we don't have many comparison points. And when you do, any type of statistical analysis, which is what you should be doing when you're trying to decide when to click, you want to have the edge. You want house odds, right? So it's statistics. You want a greater than 0.001% probability that you have favoritism in your decision making, and typically I like even higher percentage than that. But so now let's look at the number of little hesitations or dips it had before it had to essentially reset. So let's count this as like resetting, right? So it sort of had 1, 2. That doesn't one. So 1, because it didn't get a negative slope here. 1, 2-ish, 3, and then the top. So 3 little pushes, and then it had to reset. Let's look here. 1, 2, then it had to reset. Then it hit its top. Okay, so our max is 2. Then it went parabolic. But let's, just for shits and giggles, let's see how many times it had a negative slope. That didn't break it. So 1, 2, 3, and it had a negative slope here. 4-ish. Okay, so 4-ish. All right. And then top. So we're sitting at total 4 right now. Now the monumental run from 3,200 to 14,000. Even though this only, went to 12,000, but price, if I could put it back on there, went quite a bit higher. Let's look. So this went 1. It didn't get negative here. So 1, 2, 3. It is negative there. 4. Yeah, it did get negative there. So 4 pushes. All right. So it's interesting that the parabolic move of 2017 and this monumental move were the ones with more of these little pushes, where the 8-hour weekly, or the 8-hour candle, the 10 EMA got negative, and it pushed. It kept pushing before it reset and touched it. So it was a monumental drive and a parabolic drive where it had 4 of those without resetting, right? That's one observation I've personally made. Another observation is, well, when it does do that, the correction that it has not only is more severe, but it is drawn out longer. So clearly, the correction from this, from a roughly like 19,800 to 3,200, you know, that took right at a year, and it was you know, Bitcoin did like roughly an 83% drop. Here though, so this also had 4 pushes without resetting. This drop. So let's do price though. Not there. From price, I think it was like 73%. So 71% drop. And how long did this take from the tip top to the tip bottom? That took 260 days. And those are the 2 that drove up 4 times. On the other healthier drives where it kept driving and its correction was short, it only had 2 or 3, right? So let's get rid of price again. All right, now let's go, once it dug out of here, let's see what happens here. So it kind of gets out of the reset mode, goes once, twice-ish, resets. Hits the line, resets. And the percentage on that from the line to there, only 30. Small, healthy drive. From here to here, it's 30. And then it had here 1, 2 drives before it topped. Here it only had one extra drive from its initial reset. So now let's go. This brings us to current. Do you notice something a little different? Do you notice something a little different? Okay. So, right, negative slope, let's not count that. This was negative. 1, not negative, not negative. 2, 3, not negative. That's kind of a 4. 5, 6. 6 drives without resetting. Well, that's odd. Now, could this be because there are, you know, bigger institutional investors in here driving it up? Sure. But what does the trend say? The trend is, it's a positive correlation between the more drives you have without resetting, in this case, if we can loosely define it as the red touching orange, the more drives you had without resetting, the longer and the stronger the correction. Now, do I think we're getting ready to see the end of the bull market? No, that's not what I'm saying. But this is just a little further evidence that that we're way overdue for a correction, and it might take a while, right? And it might come all the way down to 40, which would be a totally normal correction of like 36 or 38% from the height of 61 something. So normal correction back, if you pull up price of the 2017 run, is between 32 to 38% if you were to measure these guys, which I've done on so many videos that I don't have to do it here. But if you could just visualize it, I think this was 38%. 35 and 33 or something like that, something along those lines, or maybe 2 of them were actually 35%. And here, as we note that when Bitcoin broke its all-time high of 20,000, it didn't reset, but previously it did, right? So that's just further evidence that, like, I just feel that there isn't enough gas in the tank to do one more drive. And if another drive happens, I think it's going to be a very, very, very violent and fast move down with a lot of opportunity to make money catching that strong dip, because volatility equals profit, essentially. But if this dries up to like $70,000, I think a lot of violent reaction down is getting ready to happen. And if Bitcoin were to decide to correct here in a healthy fashion, the typical play of hitting the weekly 21, all right, Oh, I don't have price on here. That might help. So of hitting so these candles here are what I drew. So it looks like it's hitting, but it's not. That's what I think is going to happen. So see how, often it hits the 21. So and this is a very similar exercise, right? Just hits, right? Throughout a bull run. And here, as Bitcoin broke, it hasn't touched it since friggin' September of 2020. I don't think it's ever gone that long without doing it. So, however, that's, the case 4. And there are plenty of cases that we're going to get a nice continuation drive. There's simply way more money in the space that this ain't over. It's just going to be a much stronger run than 2017. It's going to be somewhere between the strength of 2013 and 2017, which is actually already true. It's perhaps even closer to 2013 in strength than it was 2017. In 2013, as you'll know, it just stayed above, the whole time, which I guess that could happen, if the move is really that strong. So, there are plenty of cases that this is going to keep going. But anyway, and honestly, this looks like a fairly healthy consolidation. So, Bitcoin doesn't always, consolidate near a top and then drop. That doesn't always happen. You'll either have big candles and then it drops. But consolidation on the weekly scale like this, healthily staying above the weekly 10, and then having a drop, that doesn't happen a ton. Typically, it likes to drive off the weekly 10 and keep going until it needs to correct to the 21. So see how it just kept driving off, and then it corrected on that monumental run. In 2017, it liked to drive off the weekly 21. But that run was clearly weaker than this run. So that's kind of a case for it only needing to touch the 10 and not the 21 this year. So it's possible that the weekly 21 is out of play this entire freaking bull run. It's totally possible. And so if we go to some of those corrections on the weekly scale, so this did some consolidation, sort of close to the top, but not quite at the top like what we're seeing, right? It just that's kind of wishy-washy, and where it consolidated was significantly lower than the top. So, and here, this drop here, it didn't consolidate at all. Like 1 week consolidation isn't consolidation. So let's see, and the one that I think is a fractal, because this the drop of 2017 around June that I think could be a fairly similar fractal is that it crossed the origin line and came back down and corrected below it. So it did consolidate, but not near its highs, right? However, remember when I pulled up the 2-day or the 2-week RSI and it looked very unnatural, right? And it smells unnatural. It smells like a trap, let's see here, 2-week. Right? This doesn't happen. Okay, so this is, kind of evidence towards the market's being propped up right now, extra long, to, just try to keep washing over leveraged traders out, washing both longs and shorts at the same time. This type of movement, I don't know if you can find it in traditional markets either. This looks very unnatural. It smells like a trap. So if it really is a trap and it smells like a trap in that regard, what would price be doing in terms of the weekly candles that it typically doesn't do in that situation? It would be consolidating near the top instead of consolidating slightly below on the weekly time frame, similar to the fractal that I think has a strong potential of playing out, dipping below this yellow origin line, which we're playing with. We just crossed, but I think we're going to come down below it. So this consolidation did indeed happen for several weeks, but it did not happen near the top. And in order to have a trap, you have to get people to go long by flirting with the top over and over and over. Oh, it's a breakout. Oh, let's long it. Right? And then you got to convince people, similar to what I'm thinking, that, oh, wait, it's time to go short because it's clearly getting rejected over and over. But then you keep it propped up and, they can't make money off that either, or you can liquidate them if they, because it is inching up. Not by much, but it's inching up. So I don't know. I think this is very, very related to the Coinbase news and the Cardano news before that. And I think we're having literally like 4 extra weeks of upper consolidation than what would be normal. Then, so without this Coinbase stuff, I think we would have already been close to the $40,000 to $45,000 area, or at least passed below this origin line, which is the same line for new viewers that we were talking about over here. So if you can see real quick, see it, that's the same line. So this was 2017, same line. It just, to me, this really feels, I don't know, it still feels like a trap, folks. This doesn't feel natural. And so if we didn't have other things, letting us know that this smells pretty fishy, this formation itself absolutely is not bearish at all by any means. Because this, stuff doesn't break down from this formation. It typically lifts off the 10, and it lifts off very strongly. But I think this is being propped up in an unnatural way. I don't know if this is natural buying, selling pressure. I really don't think it is. I think this is the exchanges using their money, and perhaps in on it with maybe a couple of hedge funds or whatever. I really don't know, but the exchanges are some of the biggest whales in terms of Bitcoin holders in the entire world. So I don't know. It just doesn't feel natural. All right, so let's try another thing, another little exercise. And this is something that you can do on multiple time frames, like even down to the 15-minute, whatever. And you can play around with this. But let me zoom in here. Let me just go. Let me close my eyes, move it a little bit. Where am I going to land? Okay, land in there. All right. So to really zoom in quite a bit and guess what the next candle would be. So I wish I kind of would have landed on this one, because, I would have been like, I'll hold with that wick, probably buy, and I probably would have said I'd sell and hold and wait. So if I landed there, I'd probably be holding and waiting right now. I want to see what the next candle does. So let's not assume leverage trading. Let's just say just normal, natural buying and holding, but you try to sell at tops and try to buy it back lower, right? So that's what I'm saying here. So here, I probably would have said, yeah, we've gone up enough candles. I'll sell. And in this candle, it's a doji. I'm going to stop. I'm not going to make a decision I already sold what I have, but I'm not going to make a decision to buy or sell the rest of my bags, whatever. So I'm holding. Okay, I should have bought. So that's a pretty bullish ending there. It's getting ready to hit the origin line. That's a pretty bullish ending in the candle. I would buy on that. Okay. Oh, I just skipped one. So I kind of ruined that. But the long wick indicates I would probably sell around here, because the red next candle is going to be hesitation. All right. This had a lot of indecision in the market, a long wick up, or a long wick down and a wick there. I would stay indecisive. I don't know what I would do here, so I would wait. I wouldn't buy and I wouldn't sell 100% of everything. Okay. That is a lot of pressure up. I am not going to buy or sell the rest of my stuff yet. And I'm going to wait. Okay. That looks good. I'm going to buy. All right. That still looks like it's got a lot of buy pressure under. I'm going to buy again, and a lot of buy holding it up. I'm going to buy again. At this point, I'm going to say, you know what? Obviously the sell pressure is overpowering it. I'm going to, sell, but not go short or on leverage. Okay. So I sold that. Now that's a ton of, that's a big wick. I want to see what the next candle is before I try to buy back. Okay. Good decision. I would still wait. I want to wait till a green candle to buy back. Green candle. Okay, now I'll buy. Good. It went down pretty far though. Oof, it looks like it wants to get stuck under this 10. Shoot. I don't know what I would do. I would probably sell 30% of what I have, just in case it goes back down, but hold 70% just in case it breaks above the 2-day 10. Okay, good. I would buy more. Darn it. So it's playing with the 10. I would, it closed below it. Gosh, I would probably sell that 30%. Nope. Wrong move. So I would buy more now. Okay. I would buy. It's getting, so this clear resistance here, it looks like it's flirting. I bet it breaks through it. So buy. Good. Gosh, it got pretty hot. I would hold what I had, but not buy any more. All right, that looks like a topping formation candle, so I would sell my Bitcoin right now. That still looks toppy. I would just wait. I wouldn't buy anymore. Okay, gosh. Let's see here. Gosh, that's 3 in a row consolidating up. It looks like it's going to go up, actually. It's consolidating near the top, so I would probably enter, maybe use half of my USDT to enter, but I'm not for sure if it's going to go down, so I'm going to go halvesies. All right, so, and that ended pretty strong without much of a wick on top, so I would buy more. That ended pretty strong. I would hold on to everything I had since I already used all my USDT. That looks, gosh. I would probably sell what I had and just see what the next candle brings. Ooh, good call. I would wait. That looks like a bottom. I would probably use half of my USDT to buy. Wrong call. I would still hold on to it. I wouldn't buy any more yet. Okay. I would actually use the second half of my USDT to buy right now. It's closed above. It's 10 EMA on the 2-day. So I'm already all in. So I wouldn't sell, and I don't have any more USDT to buy, so I'm holding. It's still closed above. I'm going to hold. Okay, it closed above. I'm going to hold. Good. That closed very strong with no wick above. I'm going to keep holding. It broke. It's getting ready to break above. I'm going to guess it's going to break above. So because that closed very strong, I'm going to keep holding. Good. That closed really strong. I'm going to keep holding. Wrong call. Oof. I would sell half because I don't know what's going to happen. Okay, it went back up. I still don't know what's going to happen. I'm holding half. I would keep holding. I wouldn't buy back yet. Okay, I still don't know what's going to happen. I would keep holding. It's still closing above the 10. I'm going to keep holding. Oof. It broke below with big wicks. I'm going to sell the second half. Okay. That has a lot of pressure. So the wick is very long on the top. I would not buy back yet. I think I've sold all my Bitcoin at this point, right? Or only half. I would still, if I can't remember, I lost track, but if I had half my Bitcoin, I'd still keep it, but not use my half USDT to buy back yet. Okay. That looks like a very strong candle. I would buy more. That looks like a pretty indecisive candle. I would wait. I would hold my Bitcoin, see what the next candle brings. Okay. That looks really indecisive too. I would sell right now. That doesn't look strong, so I would sell. Okay. That still doesn't look strong. I would not buy any more back. I would be waiting. It's still closing above though. I would be waiting, very indecisive. Like lots of dojis, so we must be getting close to current. So I'm not looking below. I'm just looking at the candles. So this means we must be like obviously pretty close to actual. I'm still waiting. A lot of pressure. It's kind of this thing is blocking it, but there's a big wick down. I still wouldn't buy. Big wick down, still wouldn't buy, and that brings us to now. So even in blindly just reading the candles and applying the same logic, big wick, above, I still wouldn't buy because that's a lot of sell pressure down. Even blindly doing that, I think there's a lot of sell pressure down. And that's a pretty good, thing to do just to get used to how candles react with the wicks and what that really means, and to really focus on when you're doing this and you're going one by one to look how it approaches this prior resistance, like two resistance, like one right there and one right there, and the shapes of the candles in the wicks as it approaches those. So it's approaching this one. It closed fairly strong. It looks like it's going to bust through, right? Bam. So it bust through both of them, actually. But pertaining to the more local highs, how the candle shapes are. And it's really good. Just go to the 2 days are a really good one to use because it gives you more candles to play with, but they're still long enough of a time frame where the wicks and the bodies both really tell a story. Or if you have, if you don't pay for TradingView and you're using the free version, try the week first, and then maybe go down to the day after you get some practice with it. But I really suggest practicing with this stuff because it gives you a different scope on the market. It really does. It's its own indicator. There is a story that happens. It's called candlestick trading, and a lot of Far East, Asia only candlestick trades, right? And sometimes I rely when all my indicators are decisive or indecisive. even though my indicators right now are telling me slightly more bearish than bullish, but I can't tell for certain anymore because it's consolidating at the top. Even though it smells like a trap, I just don't know. It could just be because this won't be like 2017. It'll be closer to 2013, right? So since I'm too indecisive, I don't feel like I have great odds if I wanted to take on a leverage short or something like that, or sell, 100% of all my coins because Bitcoin's going to fall 30% and therefore altcoins. Well, I'm not confident enough to do that. I'm going to rely on my candlesticks because they're kind of like the tiebreaker for me. They're stochastics and candles are my primary, secondary indicators. And right now the market looks too indecisive. It looks like there's, so below this point, yes, there's more buy pressure, but above that point, there's more sell pressure. And that's what I've been saying. Like, there's so much pressure on both sides. And like, once this breaks, it's going to go up real fast, or it's going to go down real fast. It's just an insane amount of pressure on both sides. Once one blows a hole, the other one's just going to fall. It's going to flood through that hole that pops. But yeah, like this is very indecisive. So I'm still in a no trade zone, even kind of trying to blindly do that. So like I said earlier, my primary secondary indicator, right? Actually, before I get there, so my primary indicators, just so you know, are my moving averages, mostly on the daily and the 10, maybe the 4 hour. So I play those. And if you don't know how to set that up, go down to my description section in the library video, and I show you exactly how I set up my chart. And I typically don't have any of the MAs clicked, besides maybe the 200. But the 200 really isn't that useful in larger time frames in a bull market. So I kind of do. So I use I only use these. So the 89 and the 200, typically for lower time frames like the 4 hour and the 2 hour. So if I am specifically not using the 4 hour, 2 hour, you can just take those off. Because hitting the daily 89 only happens once or twice or 3 times, maybe 4 times in the entire bull market because things are so strong. It typically corrects off of the daily 55. Actually, let's just kind of look at how that happens. So this is the 2-day. Let's go down to the daily. Yeah, see how it corrects right down to that a lot. And this was pulling out of the bear market, so that's not kind of a very good. But in 2017, I think it hit the daily 200 multiple times. If I can pull that back up, which aligned almost exactly with the weekly 21. So nope, it didn't quite hit it. It only hit it once before it really broke out. So it was more like the daily 89 then. No, it went between it. So yeah, so that's where the weekly 21 was. It was between those two lines. Anyway, so, you don't have to have all these lines up all the time and being confusing, unless maybe you're going down to a smaller chart. Because, for example, the 4 hour, the 200 EMA is a very common play in all of cryptocurrencies. Look how much it supports that. And if you go across coins, I mean, it just is the play. So, I mean, honestly, a great buying strategy, if you're trying to find out what coins to buy, like market buy in the moment, so that you get a 30% increase or a 50 or 100% increase in your money most quickly as possible, because the coin you favor, like 𝐿. Let's say you sold 20% of your 𝐿 because you think it was toppy and you think it's going to move sideways. You want to grow that while 𝐿 is moving sideways so you can go back and buy more 𝐿, right? Because you have more money because you made it increase. Finding coins that are hitting the 4 hour 200 EMA, and I've hit it more than once on a 4 hour candle. It's not just like the first 4 hour candle because it usually hits a few times. Those are probably really good choices. Statistically very likely things to play out to increase your money by 30% quickly, and then move it back into 𝐿. Now you could buy more 𝐿, right? Or perhaps even double your money if it plays off a nice run after that. So for example, what's one that I know is doing? A lot of them are Tone, I think is. Yeah, see that? So I personally, my MTV bags, I'm going in my altcoins, but I sold, I think, a 10 bag of MTV, and I moved some of it. I just bought the 4 hour 200 EMA on a bunch of coins, and I spread the money out. So, because I don't know which one will pop more quickly, but since I think MTV will be correcting here for a month or so, I'm going to try to 1.8x that money before I buy back MTV. And hopefully all that happens before it's coming back up. So it's still maybe not at the bottom, but it's been going sideways, and I can almost double my money while that's happening. And that's how I chose to do that with the 10 percent of my NPV that I sold. So that's a very common play in cryptocurrency. Let's just see how Bolt reacts to it. So yeah, Bolt reacted to it, and that almost might be what Bolt's waiting on. It might be waiting for the 200 EMA to come back up, so it can play it and then bust. That actually might be what it's waiting on. So anyway, so what I was trying to get to is my primary, secondary indicators. So my primary indicators are my moving averages and my RSI. Okay, because the RSI, I just love being able to see the amount of gas in the tank of each asset, whether it's Bitcoin or whatever. Which, I mean, it doesn't look like it has much gas in the tank. I mean, the daily's just been getting lower and lower and lower, and the weekly is stuck under its moving average. Yeah, I mean, the weekly's like, that can't be good. Like, stuck under the moving average this high without resetting, it doesn't look good to me. It looks like it needs to come down a little further. Perhaps there's a trend line to where it comes down. Oh, lo and behold, there is, right? So in the last bull market, it came down maybe somewhere between these lines. Somewhere, let's just pick this. And look how far away it is from there, right? So what are the chances of it busting through up this high? Like, it doesn't happen. It hasn't ever happened, right? So there's no gas in the tank, right? So anyway, that's one of my primary indicators for that reason. I can just tell from it that there's not much gas for another push, which means I think it needs to come down first. But anyway, so moving averages, RSI, my primary indicators. So I showed you how I use candles to try to be my tiebreaker. But my other primary, secondary indicator, which I don't know if I've talked about enough, are Stokes. And just one more thing. So the way I use Stokes is the trend lines, and I have gone over that. But for example, on the weekly scale, if you're holding a lot of tether because you're scared Bitcoin's going to fall, which is sort of what I'm doing. I'm holding a decent amount of tether. I didn't sell everything. I don't suggest that. If you're well diversified, you pretty much don't have to. If you're into like 15 different coins, fairly even spread, I mean, you're probably going to be fairly okay, because a lot of those will be at the bottom of support, and they're not going to fall drastically when Bitcoin falls, if Bitcoin does end up falling, which I think it will. But it could easily go the other way. Anyway, so a good way to figure out, okay, when do I put my tether back in play? When is Bitcoin done correcting? Besides the horizontals, and the stuff we have in the moving averages, you can have another easy way to identify it by this trend line. In the last run, when it corrected, 35%, it went straight to here, and then straight to this trend line. These are the corrections. So July 2017. And it turned right back around, and the blue crosses the red. So the blue is the faster moving of the two, the red's the slower two. So a good way to tell, okay, I have, not only horizontal, I hit a main moving average, but I need one more thing to give me statistical probability that when I enter my tether, it's green from here, right? I have a statistically very probable trade of being in green, like immediately and moving forward, is if the, just kind of a confirmation tool, is if, the blue, actually, that's too much. If the blue starts curling around and crosses, and maybe you can even confirm it before the red does. I guess let's just leave it like that. So that's the red, and then the blue goes faster and it crosses up like that. So once you see something like this, and you've hit your primary indicators are saying, okay, this correction's about done because I hit key horizontal, or hit an origin line, or hit the weekly 21, or whatever the case is. When you see that happening at this trend line, then you are the house. You are the house when you put your tether back in. So I use trend lines for more timing and like my last little confirmation need to know that I don't just have like better than 50% odds. I have like 70 to 80% odds that this isn't just going to turn back around and dump on me now that I'm putting my tether in that I've been holding for 3-4 weeks, right? So that's how I use Stokes. It's tied for my top secondary indicator with candlesticks. So that's how I use my indicators. And I really feel that all the other indicators that you could ever use, whether it's MACD, there's so many indicators. I think they tell the same exact story as what I can tell with my two primary indicators and my two main secondary indicators. I think anything that I can see with those is the same story that's being told with a bunch of other indicators. I don't think any other indicator shows that I'm actually missing some data, or I just don't think there really are. I think the data is in these four. So when you're playing with indicators, you really should stick with a top 4 or 5. I would not be transferring across a million indicators to try to get them all to align, because something like RSI itself, you already have a lot of alignment across the 2-hour, the 4-hour, the daily, the weekly. That's 4 different things right there in one indicator, right? That's 4 different stories. So why would you compound that to other indicators that also have 4 other stories, the 2-hour, the 4-hour, the daily, the weekly, right? You're just growing too fast and it'll get confusing, right? So that's kind of my spiel on how I read the market and roughly, how I go about things. Another fun thing is I think it's Control I. That didn't work. Shift I? Nope. I thought there was a way to inverse your to do an inverse chart, but it's really fun to inverse your chart. I should have figured this out before I started recording. To inverse your chart and to see if your brain agrees, but in inverse what your brain was saying during the normal chart. So since I think it might be going down, if I inverted my chart and just legitimately tried to forget that I think it might be going down, and I legitimately saw in the inverse chart I think it will go up. But I don't think I have great house odds, but I'm pretty sure to go up. Then that would be an agreement to the idea that I think I have tiny smidge of a statistical advantage by thinking it might go down and being prepared for a down movement. It would be in line with that because it'd be inverse, right? But if you think things will go down on both charts, that means something's wrong and you are not doing technical analysis correctly. So it essentially makes your technical analysis, it's auditing yourself essentially. So to flip your chart to the inverse, gosh darn it, I know somebody in the comments, tell me how to do it. I'm sorry, I'm so stupid with TradingView. I'm getting better though, and I will keep forming my trend lines like this instead of the horizontal line. I like to know why, and so a lot of times I'll end it there so I can tell exactly which candles I'm looking at. You can't do that, but anyway, so I've gotten that feedback, I know, but I like my trend lines. I don't care if it takes longer. So yeah, somebody tell me how to do that, and then anybody else viewing this this video a little later, just look down. I'll probably pin the comment up there, but that's a great self audit. And and if you get to that point where you say, oh wait, I think it's going down on both or up on both, then you need to figure out what you're using wrong among your main indicators. And really the answer to that very well could be, I'm using too many flipping indicators, right? I mean, there's very strong diminishing returns in using more and more indicators because they're telling the same freaking story, just with a different, flavor or different adjectives or whatever. It's telling the same story from a slightly different perspective. So you don't need to be told the same story from that many perspectives, right? Like if a police officer is trying to gather data over a situation and there's a crowd of 200 people that saw the same thing, there is a limit there's a diminishing returns that gets really extreme after he or she, the police officer, talks to like 8 people, right? Because after that you get, the bang for your buck, or the bang you get out of each 15 minutes spent goes down and down and down and down and down after a certain point, right? And that could be after 5 stories, 6 stories, something like that. Then you get less and less and less and less out of each 15 minutes spent. I think the same thing applies to using a bunch of indicators. I would strongly suggest, so what are my top, is moving averages, RSI, and then my main 2 secondary are, for confirmation, is stochastics and candlesticks. And I rarely use anything else. Now, during the bear market or deep into the bear market, I do use a lot of other indicators to try to tell, okay, is this really coming out? Is this really pulling out? But during a bull market, you don't need a whole lot. Right? So if you're using too many indicators, stop it. Just pick 4. And technically I only have 3 because candlesticks is one of my indicators. What else? Ethereum. Let's just yeah, I mean, and if this really is a trap, then that means, this entire candle is a trap. unnatural price movement, breaking an all-time high to get people to go long, and then to get people to go long. And I think what happened here is it actually went down a lot within this candle as well. Let me see here, 2 hour. I thought there was a big drop after it did that. Yeah, so it dropped. A lot of people went long right there, and they end up falling flat on their faces. So I just, it almost seems like everything here, actually, not even that, here is propped up. What the hell kind of drawings do I have on Ethereum? When did I do this? This is awful. Did I just do this? I need to get rid of that. So yeah, I mean, Ethereum looks, this is the 2-day. Yeah, it just looks like this was the retrace up and it should have been falling. Like this just doesn't, to me, this just doesn't look right. Consolidating at the top like that, I mean, it just doesn't happen very often. So now the time it did happen was in 2019, 2020, if we can go there, and that's when you were wishy-washy between is the bear market really over? Is the bull market really starting? Okay, you had that a bunch, like right here. Happened twice. 2 really big consolidations, right? Then it popped up. So that was June 2020, happened again here. But that's pulling out. That's like converting. That's a big macro trend reversal. So, since we're not in a macro trend reversal, you would expect something slightly different when you are having a macro trend reversal, right? So not counting those two, what's happening right now just doesn't happen a ton. It usually, you gotta get down to get up, and you will play off of, similar to the 8 hour, you typically have a reset where it will cross down. Right? In order to have another drive up, you typically bounce off of the trampoline instead of just like floating higher and higher off of one freaking bounce. This is the 4. Yeah, this is the 8 hour, right? I mean, look at that. Unless this run will be more like 2013. So that's what I got for you. These are the thought experiments that I've been going over since there's not a lot to do in Bitcoin until it decides one way or another. Until we have a confirmation of a breakout over whatever the high is, 61.3 or whatever. But you probably want to close the whole daily candle. I wouldn't rely on a 4-hour candle. Or if we break down below, 56K or something, and close a daily candle down there, then Bitcoin will probably violently move either the down direction or the or north. So stay safe out there. And again, when Bitcoin's consolidating and things are boring, you have to make your brain accept that. You need to control your thoughts and stop looking for home freaking runs. You need to stop. And sometimes just sitting there and not trading at all is sometimes the best trade. I'm telling you, you need to swallow the pill that this sometimes trading, even if retail trading and you're not doing like extreme leverage, it doesn't matter. Any trading, even swing trading, it's a large portion of the time. Maybe 30 to 50%. I mean, no trade is the best trade. To be fully out of, like, just flat, so perhaps like all in tether or something. Sometimes that is the best trade until it decides one way or another. Am I recommending you sell everything in a tether? No, I'm not. Because, I mean, this easily could go up, and this could be like a 2013, and we don't need the weekly 21. Very, very possible. Do I think it's probable? No. I think we're seeing a trap. The market being falsely propped up longer than it normally would have. But it could easily, be the other way. So accept the fact that no trade is sometimes the best trade. And as you can see on my screen, let me move myself. Like, look at all these, even the small alts. Even these small alts, like it's almost right across the board, which could be kind of like your stochastics, an indicator that which way the market might move. If it's that red and you use it as an indicator, it might be, but I don't know this. I haven't back tested that theory. But it kind of looks like, some people in small alts are getting ready for a big drop. which means that could mean other people are getting ready for a big drop in Bitcoin, which sometimes that becomes a self-fulfilling prophecy. If a lot of people are thinking the same thing, it happens. So no trade might be the best trade. Stop trying to hit home runs, hit singles, be happy with getting in and out with like 30% increases up to 80% increases. I'm not going for double my money on almost anything besides DAPPT, which I don't know if it's a good buy now, but I bought a lower end. I bought a second higher low on that instead of the 4-hour 200. I bought this higher low right there because it's making a higher low and I'm actually doing okay. And I think it might break all-time highs. That might have been my best buy for my a portion of my 10 bag for MTV. But other than that, I can't find any heller trades. There aren't a lot of heller trades out there. And as you know, now that DAPPT is up this high, I don't think it's a great trade anymore to get in. So don't follow what I'm saying. Go do what I just said. I caught it down here at this higher low. All right. Once Stokes got to a certain degree here, I got it. To essentially a double confirmation that this will be a higher low. Even before it started closing above the 8-hour 10 or 4, whatever I was using. I think I used the 4. Once it got above the 4-hour 10 right there. Actually, I have a yellow dot where I bought it to remember. Yeah, it got above the 4-hour 10 I bought to confirm that it's not going to go back down to the bottom of the range, which is here. And I think that's my best play. I only have one really good play, and I'm trying to double a portion of my money while my MTV, which has skyrocketed. So I sold 10% of all my MTV holdings right under 1.2 cents. Okay. And I don't want to draw too much on this because I'm going to do this in my next video. But the point is, hit singles. There aren't a lot of fantastic trades. Stay safe. Don't be screwing yourself over by getting a bunch of trading fees without making some good gains. That's why no trade is the best trade sometimes, because there are fees to this. This is a negative sum game. It's not just buyers and sellers. It would be a zero-sum game if that were true. It's buyers, sellers, and exchanges. No trade, the best trade. Think about it. We'll see you later.